Hi, good morning everyone. My name is Ram Dhamija and welcome to my channel. I bring to you my perspective about the markets and how the markets can behave going ahead into next week. This particular month has not been great for equity markets, and equity markets in India have already corrected by about 4% in January, and the total correction in the mainline indices is about 11% now. And this is from the top. If you see, the correction had started somewhere in October and it is still continuing, and we really haven't been able to make the all-time highs or clear or go anywhere even near them. In fact, some of the indices have not even gone to or have fallen below the level which we saw on the election day low. So that is not a great sign. Nifty is still not there. Nifty is about 8-10% still away from that particular level, but the signs are not good, and the world market cues are also not great going ahead. So I will talk about all of them and how the next week can pan out and what should one do in such a situation. So I will start off with first what Nifty has been up to. So Nifty has been in this particular range that I had talked about for the last 5 days now, and this range is not getting broken. The Monday that we saw the huge candle and the huge breakdown of Nifty from 23,400 to 20,000, that low is still holding though, which is a good sign, but the high is not getting crossed. And till the time decisively we break out of this range, we are not out of the woods. So that is not a great sign for us. And coming to how the performance of the other indices has been. This is the chart which shows how the other indices have performed. This is from their all-time high. These are the indices, how they are looking there in terms of their fall. So if you see over here, let's first anchor on Nifty. That's about 11.7 odd percent fall that we have seen in Nifty. But look at the other indices. Some of the indices have fallen less than it. For example, Nifty IT, Pharma, Small Cap, Fin Nifty, Mid Cap Nifty, these have fallen less. Now, typically these indices, be it small cap, mid cap, etc., they fall almost twice of Nifty when the correction sets in. So the correction probably is just starting, and why I say so is I will show you that in the next subsequent tables, why the correction probably seems to be starting in the small and mid cap names as well. Or if it starts to take shape, then it can probably take these indices further down. Some of the indices which have performed poorly compared to Nifty are private banks, FMCG, infrastructure minus 13%, MNC index minus 16%, realty. Now this was one of the stars of last year. It has fallen almost 20%. Autos again are down. Nifty next 50 is down minus 16%. It was down minus 21% a couple of days back. From there it has recovered 5% over here, but still it is down minus 16.5%. Metal, commodities. Now PSE and PSU are completely hammered out of shape. They had gone down to as low as minus 25%. From there they have recovered a bit. Minus 25% for an index means that a lot of stocks are down minus 50 to 60% in these indices. Now let us come to the performance of the industries, the sectors, and let us see how the sectors have behaved. So if we look at Nifty equity small cap, okay, now this is reflective of the mutual fund data, which is reflective of these indices as well. So if you look at a basket as a whole, so small cap index, if you see, in the last 1 month has gone down by minus 8%, right, and mid cap has gone down by minus 7%. So that is where I say that the pain slowly is starting to build in these indices as well. However, these indices are not correcting as much just because there's a lot of SIP money that comes into these indices. And if you look at the 1 year performance, the 1 year performance is still good. The 1 year performance of small cap is about 17%. About for mid cap it is about 18%. For Nifty it is much lesser, right? So having said that, they are still outperforming, and if you look at 3 years, 5 years, 10 years also, the performance is very decent. But slowly we are starting to see this underperformance come in. So this is a signal which is reflective that this mid cap and small cap might be under some pressure. If they start rallying from here, great, then they will continue their outperformance. But if they start to break down, then we can see a massive correction in these particular names. And then this is the other indices, how they have performed over the last 1 month, 3 months, and 1 year. Now coming to how the queues are stacked up, the international queues are stacked up for us as we go ahead into trade next week. So if we see S&P VIX is kind of cooled off by minus 3.8%, which is great news. And also I will talk about the Trump inauguration on January 20th and how that is going to impact. But first, I will finish this data. And if you look at the US 10-year yield, it is at 4.6%. Now that is something of a worry. It has to cool down. If it doesn't cool down, then we are going to have a trouble in terms of FII money getting pulled out. If you look at how the US markets behaved, they were up. Nasdaq was up 1.6%. Bitcoin has crossed 100,000 US dollars, which is great news. The dollar index at 109 is not good news for us at all, which basically means that there is strength in the dollar, and that you will see in the USD INR rate at 86.57. If you see over here, this the currency is actually sliding, and sliding big time. But it's not that only our currency is going down. If the dollar index is going down, that means the dollar is getting strengthened against a basket of currencies, and our currency is one of those currencies which is falling in line. Crude is at 80, which is not great news for us again, but it is still better than 83, the top that it reached some couple of days back. Gold is at 2,700 US dollars, which is again a again a bullish sign for gold, and silver has crossed 30, it's at 31. So these are the international cues. If you look at the open interest data, this is the open interest data. Nifty open interest is at 0.79, which basically means 10.68 crore calls are there versus 8.46. Now this is not overly bullish data. This is a slightly bearish data in my opinion. And if you look at Bank Nifty, it is very, very bearish. 5.5 crore calls versus 2.84 crore puts. PCR is at 0.52, and that is what we are seeing even in the Bank Nifty performance. It has just been going down. It has just been going down one way. So if I just put Bank Nifty over here, you will see the kind of fall that is there. From 53,800 we fell down to 47,800, and we are trying to stage some sort of a comeback, but it is not very convincing right now as we speak. So the open interest is not very very positive for us. In terms of the performance, I've already taken you through that. Now coming to what is the result calendar looking like for this particular week. On 18th we have result from Kotak Mahindra Bank, and apart from that RBL Bank, Canfin Homes, then yeah, so that's it in terms of the major ones. On 19th KSOLs is coming with the results. On 20th we have Zomato, IRFC, Dixon. So these are big names that will be releasing their results. Then Paytm is coming out again, ICICI Securities. And is there anyone else? No, there's no other major one. And then on 21st we have ICICI approved life insurance company, UCO Bank, Tata Technologies, PNB Housing Finance coming out with their results. And on 22nd we have the big one, HDFC Bank, Hindustan Unilever, Pidilite, and Bharat Petroleum. So Persistent System also is coming out. So 22nd is going to be a big day with two big heavyweights of the index, HDFC and Unilever, coming out with their results. So these are some of the triggers for next week. What else do we need to look out for? Yeah, so the most important thing that we need to look out for is the Trump inauguration that is going to happen, and people are talking already about a lot of tariffs getting imposed on countries. Now there is a talk that these tariffs are going to get imposed in a slow way, in a uniform way. If that happens, it's going to be great, but if they get imposed all of a sudden and in a huge proportion, then that would mean that US deficit is going to go down. Once the US deficit goes down, the dollar is going to strengthen, the dollar index is going to strengthen. That basically means all the other currencies in relation to dollar are going to go down, which would then again mean that FIIs will continue to pull out money. In fact, FIIs yesterday had pulled out again 3,000 crores, making this particular month at 46,000 crores, which becomes the second highest month for this financial year in terms of their pullout. So the first one was October at 112,000 crores. The second one was November at 45,000 crores, and now 46,000 crores. So FIIs are relentless in their selling, and that is because of the dollar index going up. And of course, our earnings are also not supporting. So single digit earnings for our companies is not something that will enthuse any foreign investor over here. So that is it in terms of the Trump inauguration. There's another thing, that is budget, which is going to come up. I will try to make something on the budget also, but budget is going to be a major thing, and from Monday onwards we are going to start reacting to the news flows that is going to come in. Already there is a lot of news flows of DTC, etc. I will not get into that because they are still rumors, but If anything like that happens, it's going to be very negative for the equity markets. So there's going to be a lot of news flow coming in the next week, and we need to be prepared for that as market participants, and we need to have our systems in place to react to any market movements. So that's it from me now for this particular week ahead. Hope you like the content. If you like my content, please subscribe to my channel. Please share it with your friends, and do let me know in the comment section what else would you want me to cover. So I shall see you on Monday with another update on the markets. And till then, have a nice weekend and have a nice trading week ahead. See you. Bye bye.